Hello dear traders, you're watching weekly financial review on Insta TV with me, Anna Kasatkina. On Friday, October 30th, the US stocks recorded their biggest monthly gains since October 2011. However, the benchmark indices ended the day suffering a loss. Also, there was a bag of mixed statistical data on the US. Last month, investors were encouraged with optimistic news from China, where economic outlook stabilized and the central bank cut borrowing rates. At the same time, hints of more quantitative easing from the European Central Bank also helped global equity markets to rise. Now investors will watch data on the US economy to estimate chances of a rate hike at the Fed's December meeting. Last Wednesday, the central bank said it was still possible to raise the benchmark rate in December if the economy was strong enough to handle it. Statistical and corporate reports caused some volatility on Friday. At the end of the day, all the major indices closed lower. However, the October results were more than successful. The performance has been the best since October 2011. The Nasdaq Composite Index ended Friday down by 0.4% at the level of 5,053.75. Still, it was up by 0.4% on the week. Over the month, the tech-heavy index gained 9.4%. The Dow Jones Industrial Average fell by 0.5% to 17,663.54, but it rose by 0.1% on a weekly basis. The blue chip index spiked by 8.5% in October. Its monthly growth was the biggest on record. The S&P 500 plummeted by 0.5% on Friday to the level of 2,079.36. Its weekly gain was 0.2%. For the month, the benchmark index rose by 8.3%, and all 10 main sectors posted monthly gains. Friday's economic statistics was mixed. A certain disappointment was caused by the final University of Michigan Consumer Confidence Index, which in October rose to 90 points, but was below its preliminary value of 92.1 points and a forecast of 92.5 points. Data on personal income of Americans did not inspire experts either. The indicator rose by the lowest figure since March, 0.1% in September, against expectations of 0.2%. Consumer spending rose in September by the smallest amount since the start of the year, mostly because Americans spent less on gasoline after another drop in prices. U.S. employment costs climbed in the third quarter, though there's little evidence of a broad acceleration in labor costs. The Chicago Business Barometer, also called the Chicago PMI, surged back into positive territory in October. The traditional U.S. holiday, Halloween, was celebrated on Saturday. It attracts the attention not only of children and people who like costume parties, but also serious economists. The Halloween indicator, introduced by analyst Mark Hilbert, refers to the stock market's seasonal tendency to produce its best returns between Halloween and May Day. Shares of social network firm LinkedIn Corporation jumped 11% after its financial results topped expectations. The company posted a loss of $40.5 million compared with a loss of $4.3 million in the same period a year earlier. Revenue rose by 37% to $779.6 million from $568.3 million in the year-ago period. So far this year, the stock has fallen by 5.5%, while the Nasdaq Composite has risen by 7.1%, and the rival Facebook shares have leapt by 34%. Shares of Valeant Pharmaceuticals Incorporated sank 16% on Friday. The company said that it will cut ties with troubled mail-order pharmacy unit Philidor RX Services. Valeant shares lost 37.5% last month, as on Thursday's close. The company said that it will cut ties with troubled mail-order pharmacy unit Philidor RX Services. Valeant shares lost 37.5% last month, as of Thursday's close. Valeant's chairman and CEO, J. Michael Person, said that the company has lost confidence in Philidor's ability to continue to operate in a manner that is acceptable to Valeant and the patients and doctors they serve. And this was the weekly review of financial markets prepared for you by Insta TV team. See you next week. Bye.